President Donald Trump hinted in the Oval Office that the current 145% tariff on Chinese goods could be reduced substantially. This remark, which shakes the structure in which the 145% is added on top of the accumulated 10% plus 10% plus 125% tariffs as of April 2025, was taken as a positive signal. When reporters asked, "Will you negotiate hard with China?" Trump softened his tone, saying, "I will not be tough with President Xi. I will be very gentle." After these remarks, S&P 500 and Nasdaq futures, which had been sluggish lately, rebounded simultaneously, with semiconductor and consumer sectors gaining more than 0.8%. At the same venue, Trump pressed Federal Reserve Chair Jerome Powell, stating that he had no intention of firing him, but that now is the perfect time to cut rates. The remarks reignited debate over the Fed's independence as the 10-year U.S. Treasury yield fell 10 BP to 4.34%. Markets were on edge, trying to decide whether this was merely verbal pressure or a sign of real personnel intervention. Larry Summers, former Treasury Secretary under Clinton and former NEC Director under Obama, warned that the more the president doubles down on tariffs, Fed intimidation, erosion of the rule of law, and widening deficits, the more markets will crash. He noted that each time Trump backs off this agenda, capital returns to the United States and equities rebound, stressing that policy inconsistency adds a risk premium. Summers also criticized the lack of transparency, calling it the textbook case of crony capitalism when a Treasury Secretary meets large investors privately to dispense market-moving information. Some analysts added that the fact a single off-the-record remark can jolt indexes proves policy credibility is deeply impaired. Trump reiterated that a 145% tariff is far too high and will be reduced drastically soon, yet it remains unclear whether China will treat this as redress for damage already done. Summers, speaking as an economist, advised that returning to a Liberation Day roadmap, that is, full tariff removal, would be better for growth, prices and employment than a self-inflicted trade war that could trigger major upheaval.